Hello and good day to all friends. This is Mojtaba Rasti from the Thales team, and today is October 17th, 2025. I'm here with a Bitcoin analysis using the Thales Market Screener tool. Please note that these analyses are for educational and informational purposes only, and if you use them to take positions in the market, the responsibility for any profit or loss is entirely yours. So, from yesterday until today, we've seen a relatively significant downward move, and the scenario we had previously built, where we predicted we might see the completion of a double bottom here, did not materialize. Therefore, that scenario is now completely off the table, and we're witnessing a downward price movement. However, you can still clearly see the divergence in the RSI lows and the price lows. In fact, this divergence has even intensified. This intensified divergence suggests there is evidence that the price is forming a bottom here. Now, as you can see, we've come down as far as 103,500, which was an important level. If I get the chance, I'll try to make a separate video for a longer-term outlook, which will show that we're near a bottom and that there is still evidence supporting a bullish view. Let's take a look at the daily chart. On the daily, you can see the candle is completely, well, we have to see in the next 11 hours how much of a shadow this candle will have. That's important. But for now, you can see it's a red-bodied candle. So let's take a look at the weekly chart. One thing to note is that this bullish aspect of ours, from some perspectives, it might actually be invalidated, and this bottom might have been broken. We even had a pullback to it on the 4-hour chart and then turned back down. But remember, even if you look at this wedge, even if this candle drops down to 95,000, look, right now it's at 97,000. So even if it drops 7,000 down to 97 or 98,000, you can still draw a new trend. See, you have a bottom here that you can use as a base. If you extend this wedge, we actually reach even higher highs. So, for example, if we come down to 98,000 here, that becomes a new bottom, and we can draw a new trend line with this candle that formed here, creating a new trend line that keeps our wedge valid and even allows for higher points. So, you can consider the possibility that this drop is just a setup for a stronger move upward. For now, I'll keep this wedge as it is. I can even adjust it a bit like this. For now, let's just consider the body of the candle and this. Let's adjust it like this a bit and take the candle bodies into account. Look, let's bring this over here too. So, based on this new shape of the wedge that we've drawn, the bottom of this wedge could be 99,000 or 100,000, which matches up with the analysis we'll do. All right, let's go back to the 4-hour chart again. The point to consider on the 4-hour chart is that, well, maybe, though what I'm about to say might not be very reliable since the symmetry here is pretty weak, but maybe we can see a descending wedge here, something like this. Look, we have a triangle like this slanting downward, and again, this triangle ends up around 99,000 or 100,000. So maybe within this pattern, if we accept this as a descending wedge, which is a pattern that logically leads to a trend reversal, at some point this compression reaches its end and we get a breakout to the upside, so we can be hopeful for a rally. And about the divergence we talked about, since this is getting a bit messy, I'll remove it. Now let's move on to the market screener and see what we have there since the start of today. So, from the start of today up until now, for the futures contract expiration. Tomorrow, October 18th, the trading volume is 3,445, and we get a shape like this. Look, it's something like, in fact, a volatility range. If we zoom in on this, we should look at it this way. We've hit the bottom, we've even gone below the bottom. The bottom was 106,600, but now we've come down to 105,300. The peak profit of this curve is at 109,900, and its upper level is 112. So, if we also consider that edge, we could potentially return to 109 or 110 and actually see a ceiling, and then possibly continue downward from there. If we move forward, the downward shape becomes more pronounced. Look, if we slide forward to see the recent trades, this downward leg goes from loss into profit. So we can still actually have a bearish outlook. Let's go to processed. Processed is showing bullish conditions, which means we don't really need to tweak its filter much. But just to be cautious, I'll set the open interest to 1 as well, so that closed contracts are excluded. And yes, the shape changed, now both sides are visible. Look, again, both sides are visible here. Above 110 and up is profitable up to 115, and on the downside, below 103 is profitable down to 98. And here, again, we've reached 98 and 100. Right now, we're leaning more toward the downside. It seems like it wants to see 101 again if we move forward. The overall shape is maintained. Towards the end, you can see the bullish leg goes up a bit, and it seems like we've gotten closer to the bottom, 103.9. Okay. Let's move on to the raw database and update our indicator with the zones. As you can see, the intersection of the curves seems to favor an upward move. The intersection on the upside is at 110.400, and the intersection on the downside is at a loss of 103.300. We can say that we've pretty much seen 103.300 right here. You can see it, we've seen it precisely, and now we're heading back up. On the upside, we've seen up to 106.600, while our actual upper intersection point is 110.400. So there's still room to go higher. It seems that in the coming hours, we might see a move upward. Let's enter these points into the indicator and continue. Okay, as you can see, the movement is still downward, and the forecast for tomorrow is still down. The ceiling has come to 110.500, which matches our agreed points, and the floor is at 103.200, which has been touched to some extent. We'll probably see a correction upward to around 110, and then from there, the downward movement will likely continue. Let's update the zones and move on. Alright, you can see the zones. There isn't much difference in width, just that the lower zone is a bit wider, from 102.800 to about 103.800, which is the area of disagreement between buyers and sellers. Here, you can see that sellers didn't want anything below 103.600, but buyers were interested in prices below 102.900. This is the area of disagreement, but the upper zone is the area of agreement. It's from 109.900 to 110.600, which you can see here is the area of agreement, meaning the seller. Here, the seller doesn't want anything above 110.600, and the buyer wants prices above 109.900. So, they expect the price to be seen somewhere in between. And the middle zone, which is around 106 to 107.5, is where we've kind of stopped for now. This green shadow has almost fulfilled the lower zone. Right now, we might see a liquidity hunt on the downside, but it seems like the price's agenda is to move toward 110,000. we can expect a move toward 110,000. Okay, let's go and bring back the contracts here, the sell contracts. Let's refresh the chart and alright, let's look at delta and gamma to see what we've got. As you can see down here, it's clear that we've reached the delta peak. We've hit the delta peak even up to 103. And look, we've even gone as far as this intersection, even a bit beyond, up to 103 and 200, almost 103 and 300. Then we pulled back. So, in a way, you could say we've seen the bottom, meaning a call sale has happened. The shape of the chart also actually looks more like a call sale, where the top has been seen. And on the upside, look, the red curve goes into loss from 111,500. So we can move upward towards where? These strong gammas, 112,250. 112,250 is our gamma short taker. Here, gamma becomes long maker, 113,300. 110,300. Look, almost in the middle of this time, that's where we are. We can pull back and have the price here. On the downside, too, we have a relatively significant gamma at 101,500, where gamma becomes short maker. 101,500 comes in. Here, as you can see, our taker has this long gamma. The result of the taker's action is buying a put, meaning a put has been bought, so our gamma on the downside is long. So here, the maker, which is the counterparty, is the put seller, and the put seller has positive delta. To neutralize this positive delta, if the price moves toward this gamma, the market maker sells to hedge the positive delta. As a result, if we move toward this, the likelihood of increased volatility and selling pressure actually rises. So these are the levels we have. These are our gamma levels that we talked about. On the upside, if we want to continue from here, our important points are: one is here where the red curve enters profit. You see, from here, it breaks even and moves into profit, and to some extent, the start of the delta's ascending phase to the downside. Around 107, we have this intersection of the red curve, 108.5. Here we have the gamma again, and here we have the intersection of delta and gamma around 113, and the end of the ascending phase. Further ahead, we can say here is the end of the ascending phase, 114, and finally, this intersection of the red curve and gamma at 116.5. These are the important points on the upside. On the downside, we have this intersection of gamma and delta and the start of the delta's ascending phase to the downside at 102.5. Here, you see the red curve has a break here, another break here at 99,940, and finally, the end of delta at 95,500 and its intersection with gamma at 95,500. These are the important points on the downside. From this point now, let's take a closer look at this. In the coming days, if I activate October 19th, you'll see that there's still a bit of room for the price to go down. That means my delta trough has come down to about 102,500, so my floor has dropped a bit lower. The price is decreasing, but the delta is increasing up to around 102,500. And again, here, along with the price drop, we have a delta drop with the average at 100,000. That means the gamma is at 100,000 for the contract's money, which is set at 100,000. So here people are buying puts. So 100,000 could be a floor that we might even expect in the medium term. But still, the chart looks like a sale, and if I remove the 18th, even the 19th alone shows a similar pattern. That is, we see a floor around 101, 102, or 100,000, and then probably another move upward if we set the expiration date to the 24th, next Friday, we get a pattern like this, which is symmetrical. You see, again here on the downside, with the price dropping, the delta also decreases up to this point, down to 100,000, where the delta actually starts to increase as the price drops further. That means we hit a floor with put selling around 98,000 to 100,000. And then what's ahead of us? Ahead of us, we have an increase in delta up to 118,000, and it can even go up to 120,000. So what we can gather right now is that the price is waiting basically to see a valid bottom. This valid bottom could be 100,000 or between 98,000 and 100,000. As we determined here, this 98,000 to 100,000 range could be the new support floor, the same bullish leg that we corrected. Alright, that's it for the weekly outlook. Let's move on to our own setup for tomorrow and take a closer look at the trades. Out of 3,445 bitcoins, 1,600 bitcoins were bought. Of these, 568 bitcoins were call buys and 1,034 bitcoins were put buys. We've already hit the put targets at 103 and 300, so now the calls could be realized, since our overall trend has been downward during this period. Now, where is the target for the call buys? It's at 107,600, 108 and above. Anything above 108 is considered profitable, meaning from here and up, we can even consider 110 as our upper zone. So we can expect call buys to be realized. For sellers, 1,842 bitcoins sold, 770 call sells, and 1,071 put sells. Put sells are still higher. The lowest point put sellers saw was 104,300, which was a while ago. We even went down to 103 and 100, so yes, we dropped as low as 103 and 300, then bounced back up. So the bottom has been reached. Now let's see where call sellers saw the top. The top was at 108,800 and 109. They didn't want anything above 109. Overall, we end up around this upper zone. So we can expect this pullback, basically a correction within a correction, and we can actually anticipate a move back up. The process data for the 20th is 617 bitcoins, not a high number. 617 bitcoins, and our setup, it has a bullish outlook. If we set the open interest to 1, you'll see that it's somewhat visible on both sides. There's activity on both sides, but with a bit more dominance toward the downside. If we set the trade volume to 10 bitcoins, there are 16 trades of 10 bitcoins or more, and there aren't any block trades among them, no heavy block trades. So we can't really talk about any particular strategies here. The largest trade we have here is 21.7 bitcoins, a long put at 98,000. You can see the numbers are gradually revealing the situation. There's also a 21.6 short put at 98,000. And here, there are precisely 4 distinct short positions, each consisting of exactly 10 bitcoins, that have consistently targeted the $98,000 floor. So, as you can see, 98,000, as I mentioned, up to 100,000 could actually be our new downside target. Let's also take a look at the liquidity. Alright, so in the 24-hour time frame, well, actually we're in the 48-hour time frame, but in the 24-hour chart, as you can see, we have high liquidity levels. There's a concentration of liquidity volume on the upside up to 111,000, which is higher. The liquidity on the downside is more scattered and less, but its concentration goes up to 104,300. Here, you can see it even goes down to 103,000. The point is, it's closer to the current price, meaning these liquidity levels on the downside are a more accessible target for the price. Let's move on to the 48-hour chart. As you can see, it's even clearer here that the liquidity levels are higher on the upside, with a concentration from around 112,000 up to about 113,000. But below the price, we have liquidity down to 104,200. Here, if we go further, we even have liquidity down to 103,000, and even as low as 102,700 and 102,500. These could, especially up to 104,300, you can also see the intensity of the color here. These could actually be liquidity hunts. After that, we'll probably see a move to the upside. So, to sum up, if I want to give my overall take, I think we can expect that after coming down, making a move up, and then coming down again, from here we can expect a move at least up to 108,500. And then another attack to the downside, targeting this level, primarily 102,000, an attack on 102,000, which could ultimately lead to us seeing figures like 100,000 or even 98,000. Thank you for your attention. I hope this was helpful, and until the next analysis, goodbye.